So markets have definitely been, I guess, in flux, really not understanding or investors not understanding exactly which way things can go. And I think there are a few reasons for that. Obviously, trade and trade negotiations between the United States and the rest of the world, that has caused a lot of angst, has caused a lot of, I guess, fear from investors, fear from different countries trying to make or negotiate a trade deal with the US. And that has really caused the markets to pull back initially, to surge forward when negotiations were announced. But now we're waiting to see if Canada, Mexico, European Union, China can come forth with a trade deal with the United States. We've heard some framework on a deal with China. We've heard about a deal being, looks like, about to be signed between the US and the UK, but nothing really here in Canada. We're hearing about a deal coming about in the next 30 days. But then when you hear our prime minister speaking, sometimes you think maybe a deal is actually not that close and it may take a little while. So trade has been one of the reasons why the market has sort of been on hold, gone up, come back down to surge once again. Obviously, the events of the last couple of weeks between Israel and Iran in the Middle East, the war in the Middle East, that also has prevented this market or kept this market from surging higher. We've seen certain parts of the market like oil move and gold move with respect to events out of the Middle East. But overall, it's been trade, the war in the Middle East, on top of a bill that's trying to be passed by Congress in the US, the one big beautiful bill from the US, from the current president, who wants to put everything in a bill, extend tax cuts, amongst, well, I guess that would be the biggest thing in the bill, the tax cuts, trying to get this bill passed. But everybody knows this bill, if passed as is, would mean a lot of debt to the United States. So a lot of reasons why this market has been on hold or in flux. And our first chart here, which is the S&P 500 year to date, you can see in April, the big sag in the middle of the chart there. In April, when reciprocal tariffs were announced, obviously the market did not like that, and the market pulled back. But really, since then, we've seen the market move higher on a, I guess, a gradual basis. We've seen a lot of ups and downs, and these are other things. Obviously, towards the middle of June, we saw a bit of a pullback because of the war in the Middle East. We've seen at times different things take the market down and move back up. But for the most part, if you look at the second half of this chart or the right side of this chart from April to present day, it's been pretty steady, bottom left to the top right. But the reason why I say this market is still on hold is because if you look at the left side of the chart, we're just getting back to exactly where we were to start the year. We started the year in January, moved up in February. We hit our high, let's say, third week of Feb, and have since come down to sag in the middle and now surge in the second half, I guess, of the first 6 months, or I guess the point between middle of April and present day. So definitely markets have been up and down, just getting back to where they were at the start of the year. Our next chart is the S&P 500 over the last month or so. And you can see that just in the last month, the ups and downs that have occurred. Again, overall, the good news is the market has definitely gone from the bottom left to the top right. As I mentioned, this bill, this one big beautiful bill that is trying to be passed in Congress in the US, that's right now being stalled in the Senate, is talking about taking on, or the US taking on, a lot more debt. And that's probably the main reason why, or the main challenge to get this bill passed. They wanted to extend President Trump's tax cuts that he put into place in his first term, and they want to extend that now in his second term. But we know this is going to cause a lot or increase the debt levels in the US. Our next chart clearly shows how much debt is being taken on in the US. Look at that chart. Oh my goodness. Look how steep that chart is. And that has just been in the last 15 years or so, how much debt has the US has taken on, how much debt the current president inherited, how much debt he added on to the total back in his first term as well. So federal debt held by public through Treasury securities has hit nearly 29 trillion. I think actually that is even higher now. I think that's 30 trillion. And we know because of interest rates where they are in the US, there's a lot of interest being paid on debt. And that's one of the big reasons why the president of the United States, President Trump, has been so hard on the Federal Reserve and the head of the Fed, Jerome Powell. He wants him to cut interest rates so they can bring down those interest payments that the federal government is paying on current debt. Jerome Powell, I'm sure, would tell you, well, that's not the job of the Fed. That's the job of the government to decrease debt levels, and therefore you would pay less interest on the debt. So there's this back and forth between the Fed and the president, and we've heard some of the commentary hasn't been too flattering, to say the least, by President Trump with respect to Jerome Powell. Our next chart here is a great chart with respect to crude oil exports from Iran. And you can see here, the main takeaway is how much those crude exports initially, or I guess back between 2010 and 2020, how much those decreased. And then since 2020, how much they increased. And Iran has once again become a major player with respect to crude oil exports. And again, one of the reasons why this market was nervous, if something happened in Iran, if something would have happened, if Israel would have bombed or the United States would have bombed a refinery or some sort of energy producing facility, look how much oil would have been taken off the market. I think it's roughly 2 million barrels a day. And that is a lot. Now, yes, the other OPEC nations believe that they could have made up the slack. But nonetheless, the market definitely was nervous about that. And again, another reason why this market has been in a bit of a holding pattern. Not to mention the war itself, right? War is not good. Markets don't like war. Our next chart, I should say, shows this. The related market decline when you see a war. There you have the Korean War, a crisis, Cuban Missile Crisis, JFK assassination, a lot of negative effects, invasion of Iraq. A lot down the left-hand side, you could see the negativity there. But the good news is, and this is what keeps investors propping up the markets, is that everybody knows that shortly thereafter a war, perhaps 2 months later, 10 months later, you could clearly see that the market rebounds quite nicely. So on one hand, market doesn't like war, sells off initially, and then the savvy investor, the smart investor comes in shortly after, buys the dips, market goes right back up. So again, war, the one big beautiful bill, trade, this is what's kept the markets in flux for the most of the first half of 2025. The good news is we seem to be getting through these things, climbing that wall of worry as we move forward. And now, with at least a ceasefire in the Middle East, we now can hopefully, or at least the president of the United States can hopefully now get back to doing what they were doing prior to the war, which is negotiate, hopefully negotiate some trade deals with the rest of the world. Canada in particular would be fantastic, but China is also important for stock market, for technology stocks. So the hope, or at least my hope, is that we can move on from the war in the Middle East back to these trade negotiations. And the hope is that they can come to some resolution with regards to these trade negotiations, and we could see this market moving forward once again.